Alrighty, guys. Trade recap from today. Another losing day. So you guys should be down 1R this week if you followed the trade from yesterday. If you missed the trade from yesterday, then that's unfortunate. I'm just have a losing week so far. But I'm down 1R this week because we got 3 losses today, but one huge win yesterday. I was light size, so I only counted it as plus 2R because that's how much I personally made. It was a 7.2R win yesterday, but I was light size, so I'm just counting it as a 2R win because that's how much I personally got out of that trade. And you guys already know, man, when the rough streaks happen, when the market's not giving me what I want to see, you guys are going to see it in full force, right? And that's because I'm transparent. You guys see every single trade I take. So today, what did we take? We took 1 break even and 3 losses. Now, all of our trades, except for maybe one that we could avoid it, but I still like it. In hindsight, of course, everything's easy to say in hindsight, but man, I can't wait for us to break out of this range. But regardless, we gotta adapt, right? We can't blame the market conditions. We gotta adapt to it, and I'll show you guys exactly what we're gonna do moving forward to adapt to these no follow through range bound market conditions. Okay, so let's break down what we caught today, and then I'll kind of talk about what we're gonna focus on moving forward. Let me mark my levels from today. Okay, so I didn't have this. So we had Asia low here. My fault. Let me get these up real quick. We had a London low. Okay. So we had London high, previous day high, London low, and Asia low. Here's where I kind of messed up today. I was looking for continuation again in a market that's just not giving us continuation. And we can look like, okay, on Friday we got continuation, and on Wednesday we got continuation, but it was way later in the day. So I wouldn't even really count these days as continuation. And let me show you guys what this market's been doing. And this just goes back to last Monday. So this was Monday, no continuation. We got that move up to London high and we stalled out. Tuesday, we got the move down to London low. We stalled out. No continuation further. Thursday, we got the move down. We got a little bit of continuation here. So Thursday, we got a little bit. We hit this low. And I think, we could make that work. Let's zoom into Thursday a little bit. Let's look at this action. This was past Thursday. It's right here. So, okay, never mind. We didn't get any continuation here. So this was Thursday, pretty much a chop fest. Friday, we got the move from London high to London low, which was nice, but no continuation further than that. Monday, obviously, straight chop, very, very bad. Tuesday, straight chop, very, very bad. Wednesday, straight chop. We ended up getting a move later in the day at 2 p.m., but pretty much sideways, no follow through. Thursday, even worse. Friday, pretty terrible. You got the move at 12, so we're done trading by then anyways, so that doesn't matter. We pretty much got the move from the highs to London low and then just stalled out. So that's been the theme. If you guys, let's look at this one more time. So here, we didn't even get a move. Let's look at it from last Monday, so which would be right here. So we got the move up and then we got the move down to session lows, and we won this day. I remember we took the short into session lows and we called it, so that was good. Tuesday, kind of, you could have took the same thing, but we're looking for continuation in a market that's just not giving us continuation. So I should have adapted sooner, and that's on me. And I always tell you guys, where I mess up and how we're going to fix ourselves moving forward. Not a lot of traders will tell you that because they're too afraid of hurting their own ego. No, we make mistakes. I'm human just like you guys, right? I just have experience, and I'm just here to guide you guys. So yes, we should be adapting to these market conditions, and we will moving forward. But okay, so check out Tuesday. We got the move from session high to low, but then stalled out. Wednesday, we pretty much stalled out. We got this move later, but it doesn't matter at this point. But we got the move from session high to London low. After that, call it a day. That's the thing in this market. This day, we didn't even get the move to these lows. It was pretty much nothing on Thursday. Friday, you get the move from the highs to London low, stalled out. Yesterday, we caught this move, so that was good. But you got the move from the high to London low, and then it just stalled out. Not London low, but this hourly unmitigated, practically London low after this big data candle. And then we stalled out the rest of the day, so that was good. Today, where did we mess up? We messed up in not following the theme. When we say we, I mean I guess, right? So we get the pop up, and this was actually a beautiful short opportunity. Let me show you guys this. Let me go to 9:30. And we'll look at this. We'll look at this short opportunity we could have took, but we didn't take because we were waiting on this data. And then I'll show you guys the trades we took. So, and we're just looking for continuation today in a market that's not giving continuation. Okay, so this is market open here. And check out what happens here. We pop right up into a 15-minute unmitigated gap. So, given the market conditions as of late, this has been happening a lot, where we either go to London high or go to London low, and then we stall out. So we want to try to catch this initial move. We're going to focus on this tomorrow, catching the initial move to this high or the low, and then just be done trading. If we miss it, we're not even going to take a trade. We're not going to look for continuation. We could look for a reversal. So like today, we could have looked for a reversal back up to session highs, and I'll talk about that as well. And it's just adapting to the market conditions is all we're going to be doing. So check this out. We have a 15-minute fair value gap up here. Remember the theme? The theme has been we open up, we get a reversal to the other side within the first 30 minutes. So what happens here? We open up, tap into this 15-minute fair value gap, and we go to the 1-minute chart. Really nothing here, but we do have a 30-second that we could have took. So check out this 30-second. We have a nice 30-second gap. Why is it a good gap? Because it's a singular gap. So any gap that's singular, it's not a series of fair value gaps. That's good. So it's a singular gap in it by itself. It did take a little while, but we do have a death candle here, meaning just a candle that's very aggressive one way. It doesn't have a wick that's 40% or 40% or more of its body. As you can see, a very small wick here. So it's a very aggressive inverse candle. Now, if this candle were to be like let's say we had a candle like this, wick all the way down here, and then we close and we technically inverse it, but we have a big ass wick, that's not such a good inverse. But because we had a candle that looked like, let me just go here. Because of how weak this candle is, it is a good inverse. So it's a singular gap and it's a good aggressive inverse. It took a while, but that's fine off the open here. And another thing we have at the same exact time is SMT. We have bearish SMT with ES. Why do we have bearish SMT? Well, as you could see, ES has this 15-minute gap that we never tapped into. So this high on ES is our bearish SMT. So we go ahead and mark that out. So let's go back to the 30-second chart. And so what is our confluences again on this trade? Well, we have SMT, bearish SMT with ES. We go to NQ. NQ took this high, so this would be our SMT. Boom. So we have this bearish SMT, and then we inverse this 30-second gap. Once again, the trend has been a little pop up, off open, short it into the low. So you get the pop off open, and then what do we do here? We go for a 3-to-1 into London lows. So stop will go above that body high. So it's a big candle. You don't expect price to come all the way up here. You could be comfortable putting your stop above the body, and then you target this low. In this case, you just go for Asia low, and as you can see, our risk reward isn't that good. So what do? We just move this up to a 3-to-1. Now, whether we get filled on this or not is irrelevant. I think we might have. Let's see. Yeah, we would have got filled on this for a 3-to-1 risk reward, and it would have played out perfect. It would have been done for the day. Now, where did I mess up? I messed up because I'm looking for continuation in this market that's just not giving it to us. But here's the reason I was looking for continuation. We have this big data candle here, and I'm expecting price to fill this candle. Now, if we got continuation today, it would have came to this data low. Data lows, data highs are very good draw on liquidities, right? Besides equal highs and equal lows, my second favorite draw on liquidity. So with this in mind, look at this 5-minute chart. We just rejected from a 15-minute gap. I did not notice SMT at the time, so I'm just going to take this off. But I did notice we rejected from a 15-minute gap, and we got a 5-minute close below. So that's very good. What do we look for our first B on our strategy, which stands for breakout? We look for a 5-minute close below a key level. Well, we got that. Now we're looking for a continuation short into our next draw on liquidity. Do we have a good draw on liquidity below? Yeah, we have data lows down here. Now all we need to see is a pop back up on the way up, create a fair value gap, and after the retest, inverse that fair value gap, stop goes above, entry right here, and we target our draw on liquidity lower, which is somewhere down here. Why is this not valid in these market conditions? Well, I've said it a lot. We're just not getting followed through. So moving forward, we're going to avoid these type of continuation plays unless we could take a continuation short if our draw on liquidity was like right here. If it was really close, right? Let's say we had a 4-hour unmitigated like right here, just hypothetical. Then we could look for a continuation short. But since our draw is all the way down here, we're just not getting that type of flow throughout the day. We can't look for that long of a trade. And so we're going to adapt, we're going to adjust, and we're going to make it work. But for now, we should have either done two things after this move happened, and this is what we will do moving forward. If we miss this first initial move, we are going to avoid this day altogether, or we can wait for a continuation reversal. So, for example, today, we could have took this. We have this 5 minute here, and after this inverses, we could take this long back into our gap. Like Emmanuel said, we did have bullish SMT at the lows with ES creating equal lows and NQ creating a new low. So we had SMT. Not my favorite SMT, it's my least favorite, but it's SMT nonetheless. I would prefer one to not have equal lows, right? One to just not have equal lows at all, because equal lows and equal highs is a really good draw on liquidity, which is another reason why I like to short today, because ES left equal lows down there. But we could have looked for this 5 minute inverse back to the upside. And after reviewing, that's what I would have done today. So entry, I'll close this candle. We target the high. And stop loss goes down here. We don't have a 3-to-1, so we got to move this down to a 3-to-1. Would we even got filled here? No, we wouldn't have. Well, maybe we would have. Let's see. I think it's actually pulled back. Yeah, we would have got filled here out of 3-to-1. And I think this played out without hitting our stop loss here. Yeah, played out. So it would have played out perfect, right, for 3-to-1. So we're going to focus on these type of trades moving forward. But instead, this is what we took, and I'll walk you guys through it. And these were valid entries, right? There's nothing wrong with these entries in a market that is flowing. Because look what happens here. This is a really good continuation short in hindsight if market conditions were better. So we have a big reject off this 15-minute fair value gap. We get a 5-minute close below. Data comes out and we're good. Data doesn't do anything crazy. Zoom into the 1-minute chart. We reject this 5-minute fair value gap on the money. Retest this 1-minute fair value gap. Perfect. And then we have this IFEG here. Entry goes on the close of that candle. And once again, in a market that's flowing, I think our stop loss was like right here. In a market that's flowing, this is going to play out every time. Target goes 3-to-1 for our first trim, and then go break even, hold runners for our draw on liquidity. All right, easy. Almost a 10-hour trade here. And this is a good entry in a market that's flowing, but it's just not that type of market right now. So we got to stay away from these trades for now. Like I said, unless our draw on liquidity is right here. Like unless it's super close, unless we just edged a 4-hour gap right here, then we could take this like this. Here, I'll show you guys. Let's say we had a 4-hour unmitigated. We move this up to a 3-to-1. So in this case, we go for a 3-to-1. Let's say a 4-hour mitigators right there. And we move it up to a 3-to-1 and just hope we get filled. In this case, we would have got filled, right? We would have got filled down there on the tick. And I'm not sure if we got edged or not. We'd go break even into these lows. Okay, so we got break even anyways after we break this low. But still, this is the type of trade that I would take right now. Like, let's say this is tomorrow if our draw on liquidity is close. But since it's far, we're going to avoid these trades from now on, okay? Until we break out of this daily range we've been staying in on the market. So that was our first trade, break even. And then where's our second trade? Our second trade is right here on this inverse. This is our second trade. Once again, it's a valid trade in a flowing market. We took this short. Stop loss above this high. And once again, we're going to go 3-to-1 and then target our draw on liquidity lower. Well, this obviously got stopped out. So we took one break even, one loss. And then I took this 30-second inversion. So honestly, just looking for too much continuation. And that's my fault. That's my fault. And I'll always tell you guys and be completely transparent with you guys when I'll tell you I made a mistake, right? Now, once again, I'm going to say it again. In a flowing market, this is going to work. This is perfect. This is a retest back into our 5-minute gap. Break and retest. Perfect inversion, right? Look how perfect this inversion is. What do we look for when we look for inversions? We look for 3 things. And if you know these 3, congratulations to you. But this is your test. Look for 3 things. Oh, shit. I just spilled water fucking everywhere. I'll clean that up in a second. Okay. What do we look for when we look for inversions? We look for 3 things. Number 1 is a singular gap, right? When we look for, now, every inversion we take does not have to be a perfect inversion by any means. But if it is perfect, then obviously it's better, right? So we look for a singular gap, number 1. Number 2, we want to see good TTT. And number 3, we want to see aggressiveness. So these 3 things give us a perfect inversion. So number 1, we have a singular gap. We just have one gap here. It's not a series of fair value gaps like you see here, right? This is a series. When you have 1 gap, 2 gap, right? That's a series of fair value gaps. Another example would be right here. When you have 1 gap, you have 2 gap, right? You have a series of fair value gaps. And those turn into breakaway gaps. Actually, you have another one up here. So it's a long series of fair value gaps. So those, you would want to wait for this top one to get inversed, ideally. Now, like you said, these aren't things where you're like, I have to do that every single time, but it gives you more confidence when you look for that. So number 1, we have a singular gap. It's not a leg of fair value gaps. Number 2 is good TTT. TTT stands for time to take. It's going to measure how long it takes to inverse a fair value gap. So gap forms right here, and we have 1 candle. So the least TTT we can have. So the least TTT, the better. And it's just 1 in this case. Number 3 is aggressiveness. Well, we get a very aggressive death candle here. It has almost no wick on it. It's very aggressive. Has no wick either way. It's a large body compared to all the other bodies, right? So we have all 3. So I don't mind this entry once again. All 3 of these trades today were valid. Stop loss goes above this candle high, and once again, go break even into these lows. Target a 3-1 and target our drawn liquidity lower. Not the market to be looking for continuation though. So we get stopped out again. And at this point, I'm like, oof. I already told you guys too. I was like, all right, I already know today's going to be trash. We could take another trade, and we did take another trade because it looked so good. And because we had equal lows on ES. And I thought I wasn't for sure going to target, at least for first trim, any further than these equal lows. But since we have perfect equal lows on ES, I'm like, we can try another short if we get something good. So we pop up on ES, tap back into this 15-minute fair value gap that we haven't tapped into yet, mind you. And then on NQ, we pop back up and we don't break session highs. So we have bearish SMT here. And then I'm looking at the 1-minute chart, and we get this inversion here. And this looked good. I thought this was going to print for us, not going to lie to you guys. So we took our entry, I think on the close of that candle. Somewhere, I think we took it on the close right here. Or we front runned it. Did we? No, I think I was waiting. I must have took it like right here. I know our entry was like somewhere right here. Somewhere along. We either took it on the close or we waited for the pop back into the fair value gap. I think we waited for this pop and we got filled like right here. So it was the same exact idea, but this time we have equal lows sitting down there on ES. So I like it even more. And we were going to take most profits into here and then target that drawn liquidity lower again. And as you guys see, we just sat in shop for a long time. So we're still in the trade. We're still in the trade. We're still in the trade. I told you guys multiple times, if you want to just get out, break even, this market is trash. You can. And right here, we got stopped out on this candle, 1046. It's just not the market that's giving us continuation trades. So once again, like, we could have looked for a reversal. And definitely would have been on ES because ES was the stronger asset, right? I wonder if we actually got a reversal signal here on NQ. Yeah, I just showed you guys that earlier, actually. So we had this 5-minute inversion and then keep the stop loss below that 5-minute candle low, and that ended up working out. So we could take these reversals. If we miss the first move, we're not going to be looking for any more continuation. I'm personally going to be sizing down a little bit until we break out of this daily range. Let me show you guys this daily range real quick. So we tried to break out of it and then just got a huge bounce back up. So anywhere from honestly in this weekly gap and this high, this range that we're in has just not been good. When you have markets that look like this, when you're actually getting moves, actually getting reversals and continuations, that's the best kind of markets, right? When you actually get these days where you trend up, trend down, trend up, like all of this. Now, this is bad action, but it doesn't last long. It lasts like 3 weeks, right? We've been in this for 5 months. I mean, look how beautiful 2024 and 2025 was. We had these nice trends. This was a little shitty, but right before that, you had a nice trend, right? You have a moving and flowing market. Perfect trend back up. So I could just keep going on. This is 2023, by the way. So as you guys can see, we're just not in a good market right now. Where are we flowing to? This was good. We made money in November, and we made money on this pop back up. Then it started getting tough. And then early February, you guys remember, we did pretty good. If you look at the live tracker, early February, first week, we made 2.2R. We made it work, right? And then 2.9 the week after was pretty good, which was this week. And then ever since, look what we've been in, right? So obviously we got to adapt. Don't make excuses. Don't fight the market. Don't blame it. Oh, the market's trash, so I suck and I blew my account. So you shouldn't be blowing your accounts. You should be using risk management. Now, if we catch a losing streak like we've been on, then I get it. I understand that 100%. But make sure you aren't going on tilt. Make sure like today we walked away, and if we kept trading, look what would have happened. We would have got wiped because it would have just kept chopping, right? So you need to understand when the market is just this is not moving good, and you need to understand when to walk away. You need to understand and adapt to market conditions. So that's what we're going to do. We're going to adapt to market conditions. We're going to try to look for that first initial move down or up. If we miss it, we're not going to be looking for continuation unless that draw on liquidity is really close. So unless it's like right here, the market probably ends up going down there and taking it out. So that's what we're going to be doing. So I feel like this trade recap was really valuable. I think we talked about some really important things. Yo, by the way, check out what happens after market closes right here. This fucking bullshit news, chop, 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 chop. And then market comes back up and explodes at like 4 p.m., 4:15. I don't even know what the news was. I'm not even interested in it anymore. Probably something about the Iran war, but this is just, it's terrible. Check this out. I know it's a long trade recap, but it was needed, right? We need to learn. We need to adapt right now. But check this out right here. Like, what the fuck? And then we finally hit buy side liquidity. So if you guys notice, we are still hitting our buy side and sell side liquidities. On this day, sell side got hit. On this day, sell side got hit, and then buy side got hit later. But we're just not getting that continuation intraday. On this day, our sell side gets hit. On this day, our buy side gets hit eventually, right? But this London high right here, like random 3 p.m. news candle. This day, sell side got hit, right? This day, really nothing that day either. This day, sell side got hit. So we're getting those initial moves, and we just got to try to capitalize on that and then get out of the market. It's that kind of market where you try to catch that initial move and then get out. And then if you don't get that initial move, don't try to force. Maybe we try it once. Don't try it 3 times like we did today. So we're going to adapt. We're going to learn from it. We're going to improve, right? That's what it's all about. So if you guys are still watching this trade recap to this point, you are going to be the one that's going to be profitable because you are putting the time to watching these trade recaps, to actually studying, to not just blame the market or blame me or blame someone on social media or blame the strategy or blame anything else, right? Actually adapt, learn, get better. I've been doing this for 4.5 years, and I'm still every single day going over the day. What can I do better? What has the market been doing the last week, the last 2 weeks? Is it something with my strategy? Is it the market conditions? Do I have to adapt? Or should I just keep doing the same thing? Right? So keep adapting, keep learning. Hope you watch this all the way through. I'm probably going to post this on YouTube because I feel like it's very valuable. And it's probably too long for Discord anyway. So what's up, YouTube? This is my trade recap from Tuesday, March 24th, where I took 3 losing trades. Peace out.